All right, guys, today is 9th of September, and we're going to do a quick little update on our performance over the last week. We didn't do much trading, so it's going to be pretty short, but let's take a look at the market real quick and see what happened here over the last week. As you can see, market was mostly going down a little bit after going up for 2 weeks. So the market is, I think it's about a percent and a half down. We can take a look at our thing here and see performance. And so market SPY week over week is 1.127. We are slightly up 0.44% week over week, and we are on track for roughly 25% return per year, assuming everything continues in this rhythm. Let's take a look here, year to date. So we overtaken the market slightly here. Obviously, they can change in a week, but for right now, we're looking good. We're pushing past the market performance here, and that's very good. Let's take a look at quickly at our Greeks and ratios. So buying power used for one-to-one trades was around 17%. The other trades 10%. So overall, that's 27%, and we could be using up to 29. So that's perfectly in line. We have 16 one-to-ones and few of the other trades. On the one-to-ones, we didn't open any new trades. We didn't close any trades. The last one closed was on August the 30th. And all of these here are open trades. And we only opened one this last week, and that was here on the 6th. Few of the trades are ready to be harvested, and we could have taken them off, but we just let them continue to decay a little bit longer while we waiting for volatility to pick up a little bit, hopefully. And let's take a look at our account. So we have a couple of little strangles on Aussie dollar and euro. Those are slightly losing for now, and we closed actually one wide iron condor on gold. And that was a quick close because we were up, I think, like a 25-30% roughly in a matter of 10-12 days or something. So we closed that, we took that profit, we booked it, and we still have the bonds and silver going on. And those are here, as you can see. So bonds are showing nicely 36% profit after 15 days. So that's pretty tempting. We could consider closing that maybe next week. We'll take a look and see how that goes next week. We also have silver here. Silver is a little bit down, 12-13%. And, just going forward, I'm not too happy with these strangles and iron condors. So I will mostly be concentrating on one-to-ones and just doing puts and put credit spreads on bonds and on gold as a little bit of a balance to the S&P 500, because putting puts on gold and bonds gives us a little bit of a diversification in case the market goes down. There is a chance, not guaranteed, but there is a chance that the bonds and or gold would go up. So we would at least offset some of the losses on one side with some wins on the other side. So it would balance it out a little bit, and that's not always the case, but often is. And it vice versa, right? Maybe the gold would be going down and the bonds, or say interest rates, go up or something like that, and then the bonds go down. Well, there's a good chance that it may or may not happen with the S&P 500. So we have a little bit of diversification, not too much. Like those three things, I think, should be sufficient enough. The majority will still be the one-to-ones on MES, and we're just going to be adding a little bit of bonds and gold. So that's for that. And then on our let's see, the shorter expiration, there's just one put debit spread left on this expiration that has 6 days to go. So that one is attached to this naked puts here on that let's see, 75%, 76% profit, and we were looking for a minimum of 75, as you can see here. So we can close them. If nothing changes, we can close them easily. We don't want to be staying in them once the put debit spread is closed. So in the next, by the end of the next week, we will be closing it anyways, so we'll just see at which point we'll do that. And then all of the others here are grouped. Each one of these groups here is one one-to-one trade. So for example, this one here, we were looking for 75% profit, and we're at 77, 78, so we could close that one if we want to. This one here shows 68. We can let it go a little bit further. 54, 78. We're looking for 80, so hopefully soon. 64 here, looking for 70 here, looking for 77 with 769. So assuming that market doesn't pull back on Monday, we should be able to close some of these as planned. Now, if the market goes down, some of these will maybe not be at a profit target. So we'll be making the decision next week, but this is just a little overview to see how we're doing. As you can see, all of these trades are in good shape as of right now, and it just depends. You see, these are the newer ones towards the bottom. They show less profit, obviously 4.3% on this one. It's been only open for 10 days. This one, it's basically flat after 9 days. And this one is also at 7% after 3 days, where the other ones here, you see, this one is days open, so 32 days open, 33, 39. So these are approaching like our normal trade duration, and they're maturing nicely. So that's on that. Let's see. This one is in a pretty good shape. As you can see, 108 and 133 are the short strikes. So if you take a look here, let's see, 108, let's see. All right. So 108 is here and 133 is here. So it's pretty close to the middle of that range. So it appears to be in a good shape. So we'll see on that one. Now, silver is not like that. It's a little bit more skewed to one side. Let's see, we're 20 and 30 are short strikes, and 20 and 30, let's make this a little bit smaller. Okay, so short put is right here and here. So we are slightly positive, delta positive on this one. So we would benefit if this trade, if the silver would go up a little bit, that would benefit us. But if it goes down, we still have ways to go. So it's all good. But I'm going to be looking to close this as soon as I can do it profitably, and if not, then we'll see how it develops later on. So this one here, these are our bill shares ETF, the treasury bills, 1 to 3 months maturing T-bills that's the only holdings of this ETF. So highly safe ETF with a little bit of dividend pay. Basically, the ETF is collecting interest paid by T-bills, and then it's distributed via dividend once a month. And that just happened overnight. Basically, it happened a few hours ago, and we got and I'll show you right here if you go here. So this just happened here you go on the 8th, 10 p.m. and we got $190 into our account. And so that's nice. We didn't have to do anything for that. We just hold it here, and that takes a little bit of our buying power, not too much. As you can see here, bill is taking 21%, 21.4% of our buying power usage. So that's good. And I think we covered everything. All right. So yeah, that's it. And looking forward to next week, and see you all then. Bye.